Okay, Chapter 17, Roman numeral 2, paragraph M, priority of distribution, again, bankruptcy. So, once the voidable transfers have been recovered by the trustee and the other assets have been sold, now we have a pool of cash that is available for distribution to the creditors. Well, guess what? There's a distribution priority order. And here's how this works. Creditors at one level are going to be fully satisfied before the trustee goes down to the next level. Okay, so if we run out of money at a certain level, then it becomes a pro rata distribution, which means creditors are going to receive the same percentage of their claim amount as it bears to the whole. So once we've distributed all the assets, and by we I mean the trustee, once the trustee has distributed the assets, then unpaid claims are going to remain unpaid. So we start out with the secured creditors. The secured creditors are first in line. Secured creditors also include lien creditors, right? A lien creditor is a type of secured creditor. And secured creditors have first claim up to the amount of the debt or the value of the collateral, whichever happens to be less. Okay. So if for some reason the collateral is not sufficient to fully satisfy the debt, then the debtor becomes an unsecured creditor for whatever the shortage is. So we take care of the secured creditors, and then we move on to the priority unsecured creditors. Now we're moving into the territory of those creditors who are not secured. That's why they're called unsecured creditors. And there's a priority order. There's certain types of unsecured creditors who are given a priority in bankruptcy. And they're listed as follows, and they're listed in the order in which they're going to get paid. But alimony and child support, in a fairly recent revision to the bankruptcy statute, that claim level has moved up to the front of the line. So who gets paid first? Alimony and child support claims. So we take care of any unpaid alimony and child support claims. Okay. If we have some money left over, yes, we do. Who gets paid next? The administrative expenses. Fees of the trustee and experts such as attorneys, CPAs, appraisers, so on and so forth. Who comes next? GAAP creditors. That's the unfortunate creditor who has extended credit somehow in between that filing of the petition and the granting of the order for relief, and it only is applicable in an involuntary case. Wage claims, employee benefit plan contributions, both of those are subject to limitations. Grain farmers and fishermen, go figure. Consumer deposits, and then at the bottom, most tax claims, and that includes claims to the IRS, back taxes, right? So it can also include state and local income taxes, property taxes, as tax claims. So once the unsecured creditors who have a priority have been paid, assuming that there's any money left over, again, these are classes of unsecured claims, we paid all of the unsecured claims. Now what happens? Well, to the extent that there's money left over, we move down to the general unsecured creditors. They have the last priority. They're considered non-priority claims. And at that point, we total up however many claims there are, add all of those up, and then you determine what percentage does each creditor's claim owe to the giant pot, and they get paid based on that, based on the amount of money that's left. Then what happens? The remaining debts are discharged. So if there are debts that remain unpaid, they're going to be discharged. Well, guess what? Is it truly all debts? And the answer is no, there are some exceptions. So what are some of the exceptions? What are some of the types of debts that are not discharged in bankruptcy? So non-dischargeable debts, there's a list, and I would point out that I have scratched out and am holding you responsible only for knowing that alimony, maintenance, and child support is a non-dischargeable debt. What does that mean? That means if the debtor has back payments of alimony, maintenance, or child support and has insufficient assets to cover those, they're not discharged. Those debts will survive bankruptcy. Notice also that DUI judgments also are not dischargeable. Again, you're not responsible for that for exam purposes, but I just thought I would point that out for what it's worth. Okay, a couple more things to keep trucking on with here. I've scratched out student loans and reaffirmation agreements. We'll stop there.